Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate mumbo jumbo. Today we're diving into some bond fund reports, so get ready for numbers, percentages, and maybe, just maybe, a little bit of excitement. I promise I'll try my best to keep it interesting. This is the semi-annual shareholder report for the Columbia Intermediate Duration Municipal Bond Fund for April 30, 2025. Basically, it's a report card that the fund sends out as a quick update. Key takeaways are the fund's cost, top state holdings, and the quality of the bonds they hold. Let's break it down. Before we get started, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Right off the bat, this report tells you exactly what it is. A mid-year update from the fund covering November 1, 2024 to April 30, 2025. They want you to know how much it costs to invest in this fund for this period. If you had 10 grand in the Class A fund, it would cost you $29 or ever 59% of your investment seems reasonable. There are also a Class C institutional 3 class and Class S shares each with various costs. And this is important because it's good to know what kind share you have. The fund boasts over $1.5 billion in net assets spread across nearly 600 different holdings. That shows good diversification. The portfolio turnover is only 7%, meaning the folks were keeping their portfolio and not panicking and selling everything. Now, this is important. Let's see where the money is actually invested. The fund breaks it down by top states like Illinois at 15.3%, California at 8.7%, New York at 8.1%, and Texas at 7.2%. These states form the base of the fund. They also tell us about the credit quality of the bonds they hold. A large majority, 98.2%, is in the highest ratings. AINAA and 0.982% is on the BBB, a reasonable but not great rating, and a small amount in lower or not rated bonds, less than 1% total. Sounds conservative, but also lower yield. This fund's investment strategy focuses on municipal bonds, mainly from specific states, and they go for high quality safe bonds. But there are several reports, and now let's skip these and check what's inside. Here's where we get into the real details, and this report contains the portfolio of investments, which is a list of all the holdings. This is important to understand the fund, so we'll check them out. Let's start with floating. Rate notes with 0.6%, municipal bonds taking almost 98.2%, money market funds taking 0.0%. The rest of the holdings are in municipal bonds. Looks like they give some color on the Massachusetts allocation with JP Morgan Chase Puttis Drivers Trust at 2,850% with a value of $4 million. New York bonds come second. So it looks like they're trying to be transparent about their holdings. Wow, all right. Now they are listing their individual bonds such as Alabama, Arizona, and California. This is great, also a bit hard to analyze. What should be the important figures to look after though? It goes on. As we can see, each bond has a coupon rate with its principal amount. Higher rate means higher risk, but also possibly higher return. The fund lists every single bond rated for the fund. However, this goes on for a long time. Here, investments are categorized across 3 levels based on how easy it is to find a reliable price. Level 1 is easy with readily available market prices. Level 2 uses observable inputs like interest rates, while Level 3 involves more guesswork. The vast majority falls into Level 2. This is where some of the juiciest information lies. Looking at the net assets of over $1.5 billion, you can see in the assets sections, the majority is for investments around $4 billion. The liabilities are $8.6 million, very low, means low debt. Now for profit. The fund is doing all right. Net invest income is $26 million for the 6 months period. Although here we can see how management services fees were a whooping $3.6 million to be $3 million fee-tanned, so it ends up to be $3 million. Oof, big number there, 26 million. Not a great sign, but expected with interest rates being crazy. Ultimately, the fund had a net decrease in net assets of about 600k due to other losses. Looks like the shareholder didn't like that fact, leading to fund to reduce its assets 26 million. And again, people leaving the fund, which is not great. The document ends, so now it's time to deliver my opinion about it. ACSEG Overall, the Columbia Intermediate Duration Municipal Bond Fund paints a picture of a fund playing it relatively safe in a turbulent environment. By credit quality, the portfolio is heavy on top-rated municipal bonds offering downside protection, .lead portfolio turnover. They are not reacting to markets, keeping a composed portfolio, key by the diversification across states. They have positions in many US states, so however, I do see some negatives as well. The actual return isn't as exciting, so you have to ask if safe also means missing out on opportunities. Even the intermediate durations bonds still got hit and have a bit of underwater numbers, and high expenses given the fund is based on keeping a portfolio and not moving around. Basically, it's a high quality safe fund that comes a bit vanilla. I would invest in something like this if I wanted to, not losing against the market for a turbulent year. There are good years where it beats the overall market too, of course, but that's not its goal. Kamau, that's it for the decoding today. Subtext 20. Alright, that's our breakdown of Columbia Intermediate Duration Municipal Bond Fund filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description and join the community to talk more about financial filings and investing strategy. Thank you so much for watching, and I will see you in the next video.